Hello. Okay, so today we're going to be talking about lesson 8.3, which is all about the post-closing trial balance. But before we get to that, I just want to do a quick review of 8.2. You can follow along with this PowerPoint, which is in Schoology. Otherwise, there will be some questions that pop up throughout this video for you to answer as we go. So, let's get to it. The first thing to remember from lesson 8.2 is that when we talk about closing entries, we're only focused on the income statement and the balance sheet columns of our worksheet. So we're going to ignore the adjustments column for now. Our first review question is which accounts are considered temporary accounts? This is super important because temporary accounts are the only accounts we close out or make zero balanced at the end of the year. You can kind of think of this by drawing a line on that income summary account on our worksheet. Anything below income summary is considered a temporary account that we will close. So that includes our revenue of sales, our expenses, and then our net income or loss. And we have one more tricky temporary account, which is right above the income summary line, which is drawing. Therefore, the permanent accounts are anything above the income summary line located in our balance sheet column. These are our accounting equation accounts. So our assets, which is cash, accounts receivable, supplies, and prepaid insurance. Our liabilities, which is accounts payable. And then our owner's equity, which is Kelly Cooper Capital. What happens to the ending balances of permanent accounts at the end of a fiscal period? So again, permanent accounts are the accounting equation assets equals liabilities plus owner's equity. Those ending balances become the beginning balance of the next fiscal period. And what happens to our temporary account? So anything below this line, remember, we're going to close out. So we're going to make it a zero balance that will start with the next fiscal period. So permanent accounts remain, whatever balance is in there rolls over. Temporary accounts get closed and the next fiscal period starts at zero. Okay. Our final thing to remember about closing entries is which ones do we close out? Which ones do we make zero? Again, those are our temporary accounts. So our revenue of sales, our expenses, our net income or net loss, and then we just jump right back up there to drawing. So those are our four that we close out.